How well do you know about your finance ABCs? Let's find out. Anything valuable owned by an individual or a company that can generate future economic profits. An asset. A measure of stock's volatility to the overall market. Beta. Money or resources used to fund a business or an investment. A capital. Money that is borrowed must be repaid, often with interest. A debt. Ownership interest in the company usually represented by shares. An equity. Contracts to buy or sell an asset at a set price in the future. A futures contract. The total value of goods and services produced in a single year. A GDP. A risk management strategy to offset potential losses in an investment. Hedging. The rise in overall prices that reduces purchasing power. And inflation. High risk, high return bonds issued by companies with low credit ratings. Junk bonds. A process financial institutions process to identify their own clients. KYC, that is know your customer. How quickly can an asset be converted into cash without losing its real value? Liquidity. Borrowed money used to buy securities, amplifying both gains and losses. Margin. The per unit value of a mutual fund or an ETF, usually representing the assets and liability. NAV, that is net asset value. Contracts that give a right but not an obligation to buy or sell an asset at a fixed price. An option contract. A collection of investments held by an individual or an institution. A portfolio. A central bank policy of buying securities to inject money in the economy. Quantitative easing. The possibility of losing some or all of an investment's value. A risk. Financial instruments like stocks or bonds that represent ownership or debt. Securities. Government issued debt instruments used to raise funds for national spendings. A treasury. The assumption and evaluation of risk by a financial institution while security issuance. Underwriting. A measure of how a financial asset can fluctuate over time. A volatility. The total value of assets owned minus the total liabilities owed. A wealth. A method to calculate annualized returns of investments with unusual cash flows. XIRR. The income return on an investment often expressed as a percentage. A yield. A bond sold at discount with its full face value to be paid at maturity with zero periodic interest. A zero coupon bond.